Hi, I'm Jared Nelson from the Investing Channel, and welcome to The Juice. Now, we've done some digging and uncovered an interesting, largely suburban narrative leading to a stock, an apartment REIT, worth your time. On Tuesday, S&P CoreLogic reported that housing prices increased 19.8% nationally over the last year. The biggest year-over-year gains were in Phoenix, which saw a 32.9% rise, Tampa, which rose 32.6%, and Miami, which climbed 29.7%. Three cities, all in the nation's 15-state Sunbelt. Nationwide, apartment building will hit a 30-year high this year, led by, you guessed it, the Sunbelt. Of the 10 cities anticipating the largest apartment inventory growth, 7 are in the Sunbelt, and none are in California. Demand for apartments remains strong in these and similar cities. And people put off buying a home for all sorts of reasons. In the current climate, record prices, alongside sky-high and rising mortgage interest rates, sit large numbers of prospective homeowners on the sidelines. However, this doesn't tell the entire story. As our suburban and Sunbelt slanted apartment REIT pick, Camden Property Trust, noted in a recent investor presentation, lifestyle often drives rent versus own decisions. These young people have a tendency towards renting, particularly in the markets where Camden does business. With Camden, you get the best of both worlds. Just look at the places that it operates. It has some intensely urban exposure. For example, I can walk to one of Camden's apartment buildings in Los Angeles right in the heart of Hollywood, a block from the corner of Hollywood and Vine. At the same time, I can get in my car and drive an hour south on the 405 to another Camden property in the heart of decidedly suburban Irvine, California in Orange County. However, California isn't the Camden story. The other Sunbelt cities are, particularly the places we traditionally think of as the Sunbelt in the Southwest and Southeast. Places that make these lists, ranking everything from soaring real estate prices to rising rents to strong apartment demand and construction. Officially, Camden says its portfolio has a 60% suburban composition with 61% of its buildings of the low-rise variety. Some areas where Camden operates get a technical urban designation but carry many suburban characteristics. For example, it would be tough to sell a New Yorker on the urbanity of a low or even mid-rise apartment building surrounded by parking in, say, Phoenix. In any event, we love Camden's more diverse concentration relative to our urban apartment REIT picks. We also love the company's 97% occupancy rate across its 171 communities. The bottom line is this. In addition to the suburban growth narrative, you get a nice dividend with Camden. A reminder, real estate investment trusts must return a minimum of 90% of their taxable income to shareholders via dividends. That's SEC law. Camden's annual dividend of $3.76 per share currently yields 2.3%, and the company has increased its dividend 12 years in a row. The stock has been on a roughly 37% tear over the last year. However, it's down about 7% year to date. Despite the upside, Camden, like the Sunbelt housing market, could have room to run. If you're a long-term investor looking for consistent and growing income that makes a relatively confident play on housing, Camden Property Trust might make sense for you. That's all we have time for today on The Juice. Click follow and subscribe to The Juice email for your daily dose of market minerals.